P/E ratio. When you look at any stocks, you can see a P/E ratio. P/E ratio means price per earning ratio. P/E ratio is calculated by dividing the market price per share by the company's earnings per share. Market price or share price, nothing but last traded price. So what is this means? How to decide buy or not based on this P/E ratio? Normally, a high P/E ratio indicates that a stock price is high relative to earnings and so possibly it is overvalued. And a low P/E ratio means the current stock price is low relative to earnings and so it could be cheap. I will make it clear with a simple example. For P/E ratio calculation, EPS, that is earnings per share, is something we have to calculate first. So the EPS is calculating by profit, which is the profit after tax, divided by number of outstanding share of the company. Take some simple values. For example, let's take profit after tax of a company is 20,000 and number of shares outstanding is 2,000. So the EPS is 10. Use this EPS as 10 in the P/E ratio formula, where let's take company's share price is 50 rupees, then P/E ratio will be 5 rupee. So what is the meaning of this P/E ratio 5? Any investor ready to pay 5 times the earning of that share as compared to the current market price, which means investor ready to pay 5 times the earnings of that share as compared to the current market price. In simple, to earn 1 rupees per share, investor is ready to pay 5 rupees per share. That is 5 times ready to pay as compared to the earnings. So with our example, how can we know if this P/E ratio 5 is fair or expensive or cheap? Basically, we have to compare with other competing company P/E ratio and also compare with the industry P/E ratio or with some same category company P/E ratio average. Looking on P/E ratio can help you take a decision whether to buy or stay away from a share. So as comparing with the average P/E ratio of other companies and competing companies, if our P/E ratio 5 is more, then it's possibly expensive. And if it's below, then our company's share value is fair and cheap. But for some famous companies, it could be expensive, but it not mean not to buy, because people who are very confident and ready to pay more for some well-known companies, and thus the P/E ratio can be expensive. So always better look on other parameters before a final decision.